Joining us now is Pure Storage CEO Charlie Giancarlo. Charlie, thanks for coming on. Let's get right to it. What did the street and maybe Pure itself get wrong about Q4? It looks like it's about in line with what the previous quarter was, but the street was expecting a big surge in revenue.
Right. Well, what's really happening, and I think as the street analysts and investors pour through the numbers, what they'll find is it's actually a good story. Our accelerated transition towards a consumption and subscription model is really having an effect. And what we're seeing is that as we move to the subscription model, of course, that means that near-term CapEx revenue is substituted by longer-term and richer subscription and consumption revenue. And most of the change in the forecast is really due to that accelerated approach towards the consumption model. Even with that, though, if I could add, we're still the only storage company that's growing this market. The overall market is declining. All of our major competitors their year-over-year growth is negative. Our year-over-year growth continues to be positive, even with the headwind of an accelerated consumption model.
It's an expectations game for sure. Also looking at operating margins projected for Q4, I think you said 19%. The street was expecting 21.6. Does the switch to subscription explain that as well?
It does, because of the deferral of the revenue. And so your costs, your costs are your costs. The deferral of the revenue changes the margin profile.
What are you seeing in Flash? I was just speaking with a rival in the space, NetApp, today. It had a report last night. As you mentioned, it wasn't so much a top-line story for them, but bottom line was stronger than the street expected, and they got some benefit from their Flash pricing. What are you seeing there?
Well, we have record gross margins this quarter, so Flash pricing, that is Flash product pricing, remains strong in the market. So overall, that was good. What we are seeing, though, is the transition from disk to Flash. As I've said in the past, I think within 5 years, Flash will replace all disk, certainly in enterprise and increasingly in the hyperscalers as well. So, this is a trend that we continue to pursue, in fact, lead, and believe that that the wind is at our back in that sense.
Charlie, it's Morgan. You mentioned the fact that you're the only one growing in the storage market right now. What do you attribute that growth to? How much of this is the impact of AI on your customers' spending and what that means for storage requirements versus other things?
Yeah, well, we had a double-digit number of AI wins this past quarter, but frankly, AI is still overall a relatively small portion of the overall storage market, which is huge, right? Over $50 billion. And, our success really springs from several things. One is we bring to our customer, for the first time in storage, really, a single operating environment that really manages all of their different types of storage, block, file, and object at all the full range of price performance, whereas competitors generally have multiple different products to address each specific use case. And the second thing is we've really brought what we call a cloud operating model to operating the storage. It is far more reliable. It operates, completely through a set of APIs. It can be consumed like the cloud, which is our growth of the Evergreen One consumption-oriented business model. It can operate both on-prem and in the cloud, and the our entire suite of capabilities can be managed like the cloud. That is, as a pool of storage, as a cloud of storage, rather than as individual arrays. So these are really firsts in the industry, and it really accounts for our growth and success.